Many thanks for joining me today on the Marketplace. Welcome back. Now, some farmers in 7 communities of the Ebiso municipality of the Ashanti region are protesting what they say is illegal acquisition of their farmlands for industrial purposes. They say over 5,000 hectares of cocoa farms owned by nearly 3,000 people are due to be destroyed to make way for development of a free zones enclave. Affected communities include Onye, Abenase, Edwinase, Asapon, Odaho, and Amwedu and Sinsensuaso.
Spokesperson of the farmers, Kwabena Boateng, says people who claim to be working for the Ministry of Trade and Industry are spearheading the move to negotiate with farmers. Mr. Boateng says the affected farmers and their dependents will lose their livelihood and cocoa production will suffer if the project is carried through. He wants President Akufo-Addo and Asantehene Otumfuo Osei to the second to swiftly intervene. We are asking, building and cocoa, which cushions the economy. If they don't leave our lands for us, something terrible will happen on this land. We are prepared to face anyone who will step on this land.
We'll certainly be getting the views of the Free Zones Board and bringing you up to speed with this development. Moving on, the takeover of ECG's operations by the firm called Power Distribution Services Ghana Limited is now expected to happen in 2 weeks. There's a new date Joy Business has picked up from persons close to the new owner of ECG. There's more in this report.
Joy Business is learning one of the issues that is delaying ECG's takeover is the new utility tariff that PURC is proposing. This is because the Power Distribution Services firm, which is set to take over ECG, argues the current rate being proposed would not offer them prudent returns on their investment and is unsustainable. We're, however, not sure all these concerns will indeed be addressed in the coming days for the takeover to really happen before the end of the month. Joy Business is learning that there are also issues with legal transfer of some assets. The Millennium Development Authority last year settled on the consortium led by a Filipino firm, Meralco, as winner of a bid that should take over ECG. It is expected to invest more than $500 million to help turn around ECG's fortunes, and there is a clause in the contracts that could see their 25-year deal being reviewed if they fail to comply with the key KPIs in the first 5 years of operation.
Let's turn our attention now to the stock market, and Vodafone Ghana has described as misplaced Ghana Stock Exchange's push for its compulsory listing or as part of the 4G licensing requirements. This was contained in a statement issued by the telecoms operator in response to comments by managers of the exchange. George Rafe has more in this report.
Vodafone in the statement maintains that there is nowhere in the licensing documents that mandate it to go public and list on the Ghana Stock Exchange. The telecoms operator says the 4G license requires successful companies to ensure that 25% of their business are owned by Ghanaians, which it insists it's not the same as listing on the Ghana Stock Exchange. Vodafone argues that it has already met this requirement because the government of Ghana already owns 30% of the company, which it believes is being held in trust for Ghanaians, and therefore listing on the exchange is clearly not required. Managers of the Ghana Stock Exchange at a press briefing last month maintained that Vodafone must be made to list on the market as part of its 4G licensing requirement to help Ghanaians share in its fortunes.
All right, so let's stay further on the stock market and want to get a quick update with some developments on the stock market last week, how the market ended last week, and also take a look at how it's opened this week. Some very, very impressive, equities on the market, which have to be taken a look at by investors. And to help us with this analysis is research analyst from DataBank Research, Adam Nicholas Poku, who joins us via Skype. Nicholas, good afternoon. Welcome to the marketplace.
Good afternoon, Mano.
Oh, no, so tell us, how did the market fare last week? How did it end by Friday?
Well, trading activity rebounded last week. Trading in terms of turnover increased by about 20%. And we've seen 12 price there of trading price with 4 price gains and 8 declines. Looking at the price gains, within Ecobank Ghana increasing by 750 per West. Without Petroleum Ghana Limited increased by 16 per to 20 per West. Cowbank gaining 3 per West to 20 per West, and Pacific General gaining 1 per West to 94%. And also on the largest chart, we've seen Ghana Bank losing 54% to 21 cities and 9 per West. The bank losing 24% to 47%. Enterprise Group Limited losing 20% to 2 cities. And Unima Ghana losing 7% to 7%.
All right, so to you, what were the 2 outstanding equities that you think performed creditably last week, and how are they opening up for this week?
Well, Ecobank Ghana was the best. The stock gained 29% to close the week, 50%. And also Total Petroleum also gained 60% to 20%.
Now, did any of the petroleum equities also perform well?
That was just Total Petroleum.
All right.
Which gained 16%.
All right. Now tell us about
20%.
Okay. So tell us about the currency market and also the commodities. How did the currency end last week? How is it opening today?
Right. On the interbank trade among themselves, the CD lost 1% to 4.95%. They also gained 1 Ghana peso, 47% per pound, and 6 pesos to 5.67 per euro on the interbank market.
Okay.
Going on.
All right, so sincere apologies for that hitch in the sound there via Skype, but it was research analyst from Databank Research, Nicholas Edem Oku, giving us up to speed with the developments on the stock market last week and how the stock markets are expected to fare this week. Still on the stock exchange, the Securities and Exchange Commission, SEC, last week announced that 6 licensed operators engaged in fund management activities in the capital market have voluntarily requested to cease operations for various reasons. According to the SEC, it approved their requests after a thorough assessment of their circumstances. Reacting to this development, CEO of Universal Microfinance Limited, Kwayo Amofa Fufi, says current circumstances within the financial sector could have led to a decision taken by the affected fund management companies. He supported the regulator's action.
When you are a fund manager or you are doing fund management as an institution, you definitely need funds inflow that you are buying. So the cost of the funds is the interest that you have to pay to those who do placement with you, and you also have to place it with other institutions to get a margin, which you use part to pay for your cost of operation, and then the difference will be the profit that the institution will keep. But if you look at the trend recently, you realize that the confidence level of people has gone down. And so it stands to reason that it is no more an easy thing for an institution to convince somebody or an institution to place funds with them. We all understand Men's Good and the other institutions that are not able to pay people's funds they place with them back to them. And so everybody, I mean, people have not actually come out of the shock and the disappointment. And so it is very difficult. And therefore, it makes it reasonable to think that fund managers or institutions will be struggling to get people to place funds with them. Then when you get the funds, you realize that the interest rate has gone down. Now, the one who is placing the funds, normally the cost of funds is directly related to the risk level. And so when people don't have confidence in you, definitely they want you to convince them with a higher rate before they would decide. And then when you give them higher rate to take their funds, you also go and you don't get a higher rate for the funds that you are placing with other institutions. And therefore, it makes it very challenging and not profitable to operate institutions like that. Then also, I think that, you see, mostly some shareholders who might have invested their money to create these businesses might not be the same people who might be managing the business. And so if the management is not able to operate effectively and efficiently to give back give them return on their shares or on their funds, shareholders get discouraged, and they think that even if we've lost some of our capital, it is better to actually get out than to keep losing more. And so the institutions will want to, such institutions, and because of the nature of the regulation, it can sometimes be very complicated. If you are not making it, it will eat up even your profit and affect the liquidity. Because if you keep paying cost of operations and you are not profitable, eventually you eat up your own capital.
The managing director of Societe Generale, SG Ghana, Hakeem Huzani, has cautioned banks that have successfully met the Bank of Ghana's new minimum capital requirement against complacency. Addressing the media at a cocktail event organized by his outfit to mark a successful completion of meeting the requirement, Mr. Huzani says the bank is doing more to sustain its operations in the country. Bismarck Ausa was at the event and has come through with this report.
Work on the bank's recapitalization commenced in 2017 when SG Ghana received its regulator's notice, which stated that the central bank had revised the minimum capital requirement for all banks. The board of directors, management and shareholders of the bank, together with the sponsoring broker, financial and legal experts, worked to comply with the Bank of Ghana's directive in record time. As at now, the bank says it has met the stated capital in excess of 4 million cedis. Touching on the way forward, Managing Director of SG Ghana, Hakeem Huzani, says there's more work ahead and that other successful banks should brace themselves for the challenge.
With this new increased capital, our participation in business will be more important. So we will continue our development. We'll continue to develop our different segment of customers, our individuals and professionals and corporates. We'll continue to improve our solutions and we'll continue to innovate with introduction of more digitalization, more digital corners and more capabilities to make the life of our customers easier.
He addressed the media at a ceremony to celebrate a successful triumph as one of the banks in good standing. On his part, Deputy Managing Director of the bank, Ernest Kweche, says the bank is working hard to increase its market share to 7.5% in a short term.
We have continued in 2018 to transform our model. We have actively increased our balance sheet to focus more energy on the local corporates and private sector segments. This is precisely in line with the report of the Managing Director on our commitment to the local economy and also on our commitment to the government projects. So this is clearly being shown in our strategy on the commercial banking.
The bank says it is committed to emerging one of the top 3 banks by 2022. Bismarck Ausa, Joy Business.
Let's now move away from the financial sector, and the Ghana Beverage Awards has been instituted to celebrate quality beverage brands that excel every year. Let's hear from Ernest Boating, who is Chief Executive of Global Media Alliance, organizers of the event.
to celebrate best in class, when it comes to the beverage industry. All the beverage, the beverage industry is of $1 billion industry, and in Ghana, it's people consume beverages every day. Technical terms, it's called share of throat. Everything that you drink, it's a beverage, and so the idea is to celebrate it, bring out the best in class, the quality ones, and we work with Consumer Protection Agency, Food and Drugs Board, and other recognized agencies to make sure that the beverages that are certified, they've gone through rigorous processes to make sure that they are registered and legal to be on the market. So any beverage company or beverage that is entered into this into this award, we make sure that they go through that screening process before they even qualify to be considered.
The Minister of Tourism and Creative Arts, Catherine Apeku, has charged small and medium beverage enterprises to improve upon their packaging to meet international standards. According to her, the move will enhance the promotion of made in Ghana products on the foreign market and increase tourist visits to the country. The minister made the call after the launch of the 3rd edition of the Ghana Beverage Awards.
FDA, EPA, all those are agencies with the requisite authority to ensure that beverages getting to the table in our restaurants and our dining area is of standard. And let's not forget, Ghana as a country prides itself in producing the best. So if I urge that local industries will take up how to package palm wine, how to package the local gin, how to package asana pito. These are healthy but locally made drinks that can also be on the international markets, and it's an opportunity in the culinary sector. So we encourage people, especially SMEs, to get into that.
And that will be it for Business on the Marketplace today. Many thanks for your company. My name is Emmanuel Abuaji. We have let's meet again same time tomorrow. Have a good afternoon.